What's happening YouTube? Welcome back to another video. Now, savings rates are at an all-time high, especially here in the UK. I think the best rate is 5.2, 5.3%, which you can get on your money. So the question that I get asked is, I've got a lot of money, should I put it all into a high yield savings account or should I pay off the mortgage? Now, there was a study that was done over in America where they interviewed a bunch of these wealthy individuals, and the key takeaway from that was that these guys have an aim for a paid off home before they start going crazy with investing and saving. So what I'm trying to say is, if you've got a bunch of cash, the main things that you should have first are have some sort of emergency fund. So ideally you should have, if you're just starting, then have £1,000 that you put aside, and what that will do is that will stop you from going into debt should you get a flat tire or the boiler goes or whatever it may be. And then you would look at paying off all your debts, so all your commercial debts, not your house, your commercial debts, so credit cards, student loans, car finance payments, if you've got a sofa on loan, if you've got, I don't know, furniture, whatever it may be, get rid of all your debts before you start saving. Then after that, you should be putting 15% into a savings pot for your retirement. Now 15% should be an okay amount. Here in the UK, a stocks and shares ISA is probably the best product to put your money into. Now over and above the 15%, whatever money you've got there, that should be going to pay off your house. Now the reasons are, high net worth individuals, so millionaires, could put their money into a high yield savings account and then earn some sort of interest off that and then see their money grow. However, they still have a property which is, at the end of the day, it's still a debt, it's still over your head. So having a paid off house it just feels completely different. It's your house, no one can take you away from it, there's no landlord involved, there's no bank involved, there's no solicitors involved, it's just you and your house, and that no one can take from you. So apart from that 15% that's going into savings, all your money should be going towards paying off your house. Get rid of that mortgage as soon as you can. I don't understand why a lot of people will drag the mortgage on for years and years until they're 60 or 70. Get it done in 10, 15, 20 years, depending on your income. If that means that you don't eat out as much, if that means that you don't go on holidays as much, or you don't buy everything that you want, you only buy the things that you need, then so be it. But get that house paid off. Once that house is paid off, what that will do is that will give you an increased cash flow that you can then go absolutely crazy with and use that for investing. So, and what you'll see is that your money will actually grow a lot quicker, because the money that you were using to pay off the house is also being invested towards your savings, which is going to compound every year as it is. Furthermore, this is a tried and tested method that a lot of wealthy individuals use. So a lot of people will be thinking, oh, but I can earn more in interest than I'm paying in interest in the mortgage. However, at the end of the day, you won't have the peace of mind that you'll have with a paid off home. And I think that's worth a lot more than the 3, 4, 5% return on your money that you're getting with a savings account, high yield savings account. Of course, you can still save a little bit, 15%, 20% is fine. But get rid of your debts, because once your debts have gone, you don't have any payments, and you don't owe anyone anything, meaning that all the money that you have, that you're earning, you can actually start enjoying it. So you can increase your savings and start investing if you want. And if your investments don't work out, then at least you know that you've still got your paid off home, which has got equity in it as well. So a lot of these millionaires and a lot of these like high net worth individuals, a big part of their portfolio is their paid off home, which once they invest in it, they pay it off. That is then day by day increasing in value and giving them equity back in their pocket. And with the increased cash flow, they're also doing savings and investing. So the answer to my question would be, if you've got a very low interest rate on your mortgage and you're getting double that or triple that by savings, you might think, yep, I'll save because I'm making more in the difference than I'm paying in the interest. However, you lose out on that peace of mind. It's not a method that a lot of wealthy individuals follow. Personally, I would want to get rid of all my debts, no matter how small or how big, because what it does is it frees you up totally. It gives you peace of mind. Walking around your house, walking about your garden just feels totally different to what it would if you still owed a big chunk on your house. And you need to remember that 100%, and that's all foreclosures on a home, happen on houses that have a mortgage. So if you've still got a mortgage hanging over your head, you don't know what the situation is going to be like in 10, 15 years. At the moment, you might be getting returns on your money in a high yield savings account, but 10 years later, you might lose your job, or you might not be able to work because of medical issues or whatever it may be. And at that stage, you'll have some savings that might be able to support you, they might not be, but you'll still have that big payment of the mortgage there. Whereas if you focus on paying off your home, especially now when you're young and you've got the energy and you can do the hours and you're in a job and you're capable, I would aim to get all the debts, especially your home, paid off as soon as possible. Once that's paid off, go absolutely crazy with investing in stocks, investing in real estate if you want, investing in gold, investing in whatever pleases you. At least you know that your nest egg, which is your paid off home, is yours and it's making you money day by day and gives you that peace of mind and gives you flexibility to do other things in the future, and you're not in debt to the bank or anyone coming knocking down the line. So that's just my two takes on the subject. Some people might agree, some people might disagree, but I'm just going with what wealthy individuals do. Looking at the study that was done in America, they focus on paying off their debts and then focus on paying off their home, because once that's done, you have no payments, you don't owe anyone anything, and then with that money you can do whatever you want. And it might not be savings, it might be go and change career, go do something else completely different. You might not need to work as much, you can sort of semi-retire, whatever you want to do. And that to me just sounds so much better than receiving a 3 or 4 or 5% return on my money. But I don't think everyone will agree with me. But hey ho, thanks very much for watching, and I'll catch you in the next video. Thanks guys.